GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. So I've got an extra chart on the screen, you may have noticed. I'm going to talk about dollar CAD. I think there's a very interesting opportunity based on last week's weekly close. Aside from that, it's a big week because we've got all the big tech earnings and we've got the Fed meeting, of course. We'll talk about that in the week ahead video. Check that out if you haven't already. So potentially some big volatility in the markets before we head into the silly summer season of range trading, which typically takes place. So let's see what this week has on offer, and I will get into these charts right now. Of course, as always, let us know if there's some extra charts you want us to cover or some particular setups you are watching. Drop us a comment. Otherwise, just click the like button, click the bells notification to let you know when the next videos are coming. That all really helps. Okay, so let's have a look at the euro dollar currency pair now to start. Wanted to start on this weekly chart just because here's a potential scenario that we're looking at here, which is a head and shoulders reversal, but a long-term head and shoulders reversal. So this is the rally that we've had ever since the the lows of the pandemic. And it looks like a bit of a topping pattern here. So we're right having, depending on how you draw this rising neckline here, we're either about to break it or we're testing it. I would say the best description is that we're testing it right now. When I drop down to this daily chart, you'll see that we're also testing a daily demand area. So that's created when we bottomed out down here, and then we had that we kind of paused for a day, and then we had an explosive move to the top side, and we never really looked back until now. And so you can see that the price has really been struggling, and it's been gradually trying to absorb all this demand, but it's actually staying generally in a fairly negative trend. And if I drop down to the 4-hourly chart now, you can see this is it. We've had buying coming into the market, but the market's still just been gradually pushing lower, and selling has been coming in, and you can see that we're in this kind of downsloping channel now. So really the question is, do we break down through this big area? Because as we mentioned from this weekly chart, potentially that's a top, and we're looking at a much more substantial decline, with head and shoulders top patterns. We mentioned this in the daily reports before, but potentially you look at an objective lower, something like this, which would take us back down close to, maybe not quite to, the 110 handle, given that we've just dropped down through the 120 handle. And we couldn't make it up to 130. Maybe we need a retest of 110. So this is potentially what we're dealing with here in terms of long-term outcomes. So I think the way that that we will be approaching this here is to assume that this short-term downtrend continues, and given the fact that we've not been able to break higher so far, assume that just this demand is being absorbed and eventually we actually break lower. So that's going to be the going assumption. If we break above this downsloping channel through the upper channel line, and we also break above the 20-day moving average depicted here in the 4-hour chart, and that would also probably correspond with breaking it. Let me zoom out the chart a little bit so you can see the RSI resistance. This RSI resistance, we popped above it once, noticeably when we first got down towards this long-term rising trend line, right? So that momentum came in, but we weren't quite able to get that buying momentum again. So if those three things happen, above the 20-day moving average, above this declining trend line, and probably above this this resistance on RSI, those would all be things to suggest that this short-term downtrend is ending, and it would suggest that this longer-term support has held for the time being at least, and that we're not getting that breakdown from the head and shoulders pattern, and more likely we're going to have a rally up and possibly even test the 120 level. So we're not predicting anything here, we're not trying to forecast, we're just waiting for the market to show its hand. We're trading with the trend until there's a decisive sign that the trend has ended, and we've just looked at that long-term support and seen a reason that potentially it would end. So let's switch gears to the British pound. Looking at the daily chart, you can see that we've just bounced off a long-term support area here. We did break through the support from these lows, but we snapped back above it after just one day of being below. So a couple of indications that support is holding in sterling. So you can see what I mean here. We did drop through that straight, or we closed at the level and then fell through it for one day, and the next day we rallied up. So potentially a sign here that along with bouncing off the 30 oversold level, a couple of indications to suggest maybe this period of weakness that sterling's been going through is coming to an end at the bottom of this long-term range. If that is the case, then we're looking for buying opportunities, but there is a pretty clear-cut area of supply up here. If we drop down to the 4-hour chart, you can see this is where it was first created, where we had that big drop down, then we held on to the support and we rallied up, just nudged above it. But really since then you can see multiple occasions, even on this last occasion where we tried to rally up and then just came to the bottom of it and plummeted down. Now it looks like we're moving our way back up to it again. I wouldn't be surprised. Maybe I'd be surprised if we bounced off this resistance and then dropped all the way down to new lows. It'd be, if we get back up to this resistance again, I would think that probably we're going to break above it eventually. But I suspect it could at least work in the short term, depending on where you put your stop losses and your take profits, offer some sort of decent risk to reward opportunity. Before eventually turning around, and at that point we'll be looking for buying opportunities. Now you can see there was a small demand area here, which I haven't actually inserted in the chart. I won't do it. Where we put in this, this pause here, and we broke higher, and now we've come back and tested that. That might be enough, and we might just rally up to the resistance from here. I wouldn't be too comfortable with the risk rewards in this particular area. It may, the price may move from here, but I just don't think it works out as a trade. But if it did drop down to the lows again, then that would be, then you're really kind of dealing with trying to buy a potential bottom pattern, and the risk reward works out a bit more. So, given that it's a downtrend, I'd be a bit more comfortable with looking for opportunities if they show themselves in this area, and again, even if it looks like the downtrend's reversing, still, given the strength of that previous resistance, still be looking for opportunities in that area too. In the middle, in this middle area, well, of course you can look up for breakout trades. We consolidated a bit, so you could look up for breakouts above the highs, breakdowns below the lows, but that I think will be open to a lot of choppy action potentially, particularly with these big events coming up like the Fed. Moving on to dollar yen. So this has been an interesting one for sure. We had that long uptrend, and then we snapped down through it quite dramatically. We held on to this fairly long-term area of support, pretty much at the 109 area, and this had been the kind of demand area that was formed, and we came back down to that fairly nicely. Missed it, depending on how you draw your lines, either just tagged it or just missed it, but it was close. But it was basically the way you'd trade this with the benefit of hindsight is that it would drop down through the support, and obviously people trying to sell this breakdown potentially got caught out, and it was a big snapback higher. And once you see this kind of candlestick having dropped through support and then rally back up, it's a nice false breakdown setup, and then even those who are looking to perfect their entry, didn't even necessarily need to buy at the open of that. Let's zoom in so we know what we're talking about here. This reversal candlestick here, you could have comfortably bought in at the open, but even if you'd wait for a drop down to the close of that candle the next day, that still would have worked out pretty neatly. And you can see that that's basically where those next few candles found support and eventually rallied up. So I think if we do break down again, this could be potentially an area of support where we've got that big rally there. But I think maybe, given that we've just broken above this resistance here and the strength of this leg up, I think this was probably all the consolidation we're getting. We've broken up to the top side. We are in a big former area of support and resistance here. But given that we've sort of tagged it 1, 2, 3, I don't sort of think this fifth time is necessarily going to work again. Maybe just temporarily to drop down to this line of support where they would then rally up again. I think so. I think it would be fair to assume that we've broken this resistance and then it holds as support. So that's 110.30. But if it doesn't, then you'd be looking down for the reversal to continue itself down here at maybe 109.60. I think that's the playbook for dollar yen, and it's all a bit of a any kind of bullish impetus that you had, any bullish bias would be written off if we drop down through this major support and this major demand area down here. Then I think this whole bullish episode would be pretty much drawing to a close, and we'd be looking at a period of weakness in dollar yen. So let's move over to the dollar CAD, which is just sort of interesting because this is the weekly chart, and so we had that really extensive down move, and then we've rallied up nicely over the past few weeks, which we pointed out at the time was because it was testing this long-term area of support. So there's the support drawn in from the previous lows, and very simple technical analysis. If you just bought on that long-term support, you'd have done very nicely at this point. But now, zooming forward to the previous week, you can see this was a fairly substantial period of resistance we'd pointed out in previous daily articles, previous weekly webinars, as potential area of resistance. It didn't really prove to be throughout the week. We've got that massive rally up in dollar CAD, but a huge reversal midweek, and we've ended up closing below the week's open. We've had a down week after being so high up. So this is a classic pin bar reversal pattern here, and you can see that it's not quite perfect, but these areas of resistance are pretty much on the eye of the pin. So if you were looking to just trade this pattern alone, you'd look for a move up to test that previous eye. So if this is the left eye, this is the nose, then you've got a right eye which would come up to the same level as that left eye, then that would be your entry point on this pattern. And it sort of stands to reason if you think that, well, we've had a substantial period of weakness, but we hit that long-term area of demand, that support area, we rallied up. But if you think maybe the trend is still in place, but it's just it's just that strong downtrend has been broken, but overall the trend is still down, and maybe maybe there's just a thought that this was a bounce to sell into to capture this overall trend, which could eventually break through the support. We don't know, as traders, we don't know if it will break through the support. But clearly there's some people who have been bearish all along, and they're selling into this bigger bounce, which we haven't had for a while because it's just been trending so much further down. So all that being the case, here you can see the levels on the daily chart already starting to get a little bit of a reversal from 126 is in there somewhere. You can see that we've pretty much come off the 126 level a couple of times, so that might be enough. But if there is a pop up to these old areas of resistance, that would obviously work pretty well too. And then you'd be looking for the price to turn lower, maybe towards somewhere into this where this last leg started. And obviously, if we break above the highs, then you can pretty much assume that any weakness symbolized by that pin bar is a write-off. Okay, switching away from Forex into precious metals. This is the gold chart. It's been very choppy, but it's been sort of, if you've just been using this form of resistance as support with a decent sized stop loss, you'd have had many trading opportunities there. It's been a great range trading market, although where to TP has been somewhat varied. Some people calling this a head and shoulders pattern. I'm not too convinced of that. I think it's just a choppy range, but I think we can put some. I think we can say that this support is pretty solid. Of course, we've had some false breakdowns, only one with the lower close intraday at least, but I think it's backed up by this RSI support. If we drop down to 30 oversold, to me that would not be a buying opportunity. That would be a sign that the momentum in the market's turned weak, and I wouldn't sell at the oversold period, but I would be taking it as a sign that the market is rolling over and likely to come down and test this 1750 demand area again. So in conclusion here with gold, I think if we did get so, I would want to be seeing some kind of pretty powerful move to the upside, taking out a potential sort of choppy downsloping trend line here. I want to see a big move to the upside, but even then we'd be inside this trading range. So it's not full of opportunity right now, gold, I would say. Only a substantial close through this support would just point to the downside. I don't quite see where we get our upside impulse yet without just a big explosive move, and even then we'd be inside the range. So look for potential short trades down to the lows with a move through this support, but or otherwise, depending on your trading strategy, just buying at this support, as has been working recently. Moving gears to silver, and let me just drag this out a bit to give this chart some context. So we had a big leg lower. We had a period of consolidation, and then we've had another leg lower. I think if we can get a bounce up towards, which has not been really a perfect area of support exactly, but you can sort of see it's where the first leg ended, and it's where this more recent low was. I think if we got a bounce up to there, it's about 25.70. Maybe that would be a sell opportunity, assuming that this leg lower continues, or equally up to this more kind of clear supply area, which hasn't, strictly speaking, being tested, but although it really probably is, the kind of, generally speaking, that's been what's capping the price all along. So another test of that could work in the short term, although I think if we do, having broken down like this, if we do get back up to this kind of green shaded area again, it could provide an opportunity short term, but I think that would indicate that actually eventually we're moving back to the top side. WTI crude oil, let's give this a little bit of context. So this was our former resistance, which has worked nicely as support after the recent breakdown. And obviously, I think it was 3 days in the end of, but definitely a couple of days of really good solid strength, rallying off of that to resistance. And we basically made it back through what was a kind of choppy area of support to the price. You can see not so much this low, but this first peak here, this peak here, and then just 1 day of testing it before really breaking down. We made it back up through that. I'm interpreting that as a positive sign that we've had the big correction, we've held on to the major former resistance turned support, and we're rallying up to at least test the highs again, is my assumption. And I think that we've broken through this, potentially what you call like a neckline, and just if we could get a retest of it, I think that would be quite a clean entry point. We might not actually get it. This little consolidation might just break to the top side. You can see this was the kind of, these previous highs here are kind of what are causing resistance at the moment. If we just break through it, we might not get back down here. But I think just, as always in trading, use a bit of patience. Don't chase the market. If we can get that, a little bit of negative news or whatever it takes for the price to just drop lower, back towards basically the 70 level. You can see 70s right in the middle of this zone. Somewhere close to 70, I think that could be an opportunity to buy. If you drop through 70, well, you can see that this was just like a massive drop down and drop up. There's not really much to do in here, so it's probably just going right back down to 66 again if we don't hold on to 70. But otherwise, I think that 70 holds, and we move up to test these former highs up here, which is sort of 75 in a way. This is the daily chart for the S&P 500. Just a very steady uptrend in place. I think I said exactly the same thing last week, and this trend line has worked very well. We actually bounced above it last week, but I had this exact trend line in, wasn't even last week, I think it was the week before last, that we've had this trend line, and it's been working. And I think this will now, because it's been so reliable, this trend line, and also we've got to kind of, you can see why the market bounced here, because it was actually the former resistance acted as support plus the rising trend line both acted together, and the market just rallied for like 4 days straight after that early week sell-off, made up to record highs. Obviously, I think just the only time you'd want to start getting worried about this market is if we drop, at least in the short term, is if we drop through this RSI support, which has become so clear, and if we drop through this rising trend line, then you could expect just a deeper correction. You wouldn't even necessarily, but for short-term day trading, you could sell into the correction, but it might just be a matter of, okay, sitting in your hands and waiting for a better time to buy into what is still a very bullish market. Last but not least, as always, Bitcoin. So you can see, so this is kind of what some people have referred to as a head and shoulders. So if this is the left shoulder, this is the head, this is the right shoulder, and the neckline is through here. Basically 30k is the round number to watch, but it's basically 28,500 you could say as a kind of round number. That's really the level to watch. If we break down through there, it could form a gap, and potentially there's support at 2400. Otherwise, as we've mentioned in the past, it's the old record high around 1800. Was it 1800 or more like 1900? Yeah, it was obviously 1900, not just shy of 20,000. That first peak from 2018. That would be ultimate support, I think, if we did get a breakdown here, and it looks possible. Shorter term, if we go down to the 4-hour chart, you can see that we've actually broken above a downsloping RSI trend line and a downsloping price trend line. Both of those are quite bullish. The fact that we held on to 30,000, we tried to break lower, we couldn't really do it, and we've moved up above this rising trend line, downsloping trend line. Both of those things are quite positive. The market's still very kind of choppy, sidewaysy, but potentially a bullish impulse coming this week. And I think definitely if we got above the middle of the range, which obviously the range is basically 30,000 to 40,000, if we got above 35,000, I think people would be confident to try and test the top of the range at 40,000 again. And then we just need to see if we can get through there. All right, that's it for this week. Thank you very much for tuning in again. Good luck trading this week, and make sure to subscribe to these videos. Subscribe to the channel so you don't miss them when they come out. Thanks, everyone.